Everyone, good morning and welcome to the first of our webinars for today. In fact, we've got two more later on. It's great to have you all here with us. We've been up since crack of dawn today, David, haven't we? Looking at the charts and what have you. But there's so much going on in the markets at the moment. There's always lots going on in the market, but this particular time is particularly rewarding, as it were, for lots of different reasons. Anyway, before we start, as always, can I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading is not for everyone, and if you do decide you would like to trade these markets, please be aware it's a very risky business and you can lose all of your money, and not only in some markets, not only lose your deposit, but actually lose more than you originally started with. I know it always sounds a bit sort of doom and gloom, as it were, but it is something that we have to highlight to you, particularly if you've never ventured into this market before. However, what we're here to do is to explain these markets to you, and let me just hold on a minute. There we are. David and myself, here we are. We're here to explain the markets to you, why they work, how they work, so that if you do want to make a living from it, it is perfectly possible, as long as you understand the risks and you understand what you are looking at on your charts. So here we are, it's myself and David, and we'll be looking at the charts today through the prism of our methodology, which is volume price analysis, supported by our fantastic quantum trading tools. And I know we always have some of our users come along to these sessions. You're obviously very, very welcome. We've got some students from our forex program, and if you want to read more about the indicators and what they have done for other traders, there we have lots of testimonials at the site, which is quantumtrading.com. But to return to volume price analysis, again, I know we have lots of attendees who've already come across the methodology and perhaps even bought the books, but if you haven't, it's all explained in the books that are on Amazon, and please do read the reviews as well. Predominantly, I have to say, 5-star, of which I'm very, very proud of. You will always find other traders who, what are you laughing? There are traders on there who don't agree with the methodology. They say it's a load of hokum, there's nothing new, etc. I'll leave you to make a judgment for yourself. But all I can say is, on balance, there are many, many more positive reviews than there are negative reviews. Volume price analysis is the methodology David and I have been using for, oh goodness, now it must be over 20 years. It's how we started in the markets. We actually started in the futures market. For forex, what we've put together is we've put together something called the Forex Trading Library. There is all the books that focus on volume price analysis, which is like the technical analysis, the chart reading, the chart reading skills that you can learn. But with forex, chart reading is just one skill that you have to develop. You then also have to understand the fundamental releases, of which they come every day monotonously on a regular cycle, which is good because we know what is coming in the trading session ahead. But what David and I have done, we've actually added another strand to them, and we've actually added the strand of what we call related markets, and we'll explain a little bit about this as we go through. But just very, very briefly, a related market is something like the equity market, the bond market. In fact, if I put the slide up, you can see, here we are. This is actually a slide from the program where all this has gone into very, very great depth, as well as the volume price analysis. Essentially, there are 4 capital markets. Forex sits at the heart of it, but all these markets are interconnected. They all interrelate. They all, movements in one will be reflected in another. The Forex is where the sentiment of the market flows through the fastest, and it is reflected in the individual currencies and currency pairs. So to give you an example, oil will always have an impact on the Canadian dollar. Why? Because Canada is a huge producer of oil. Market sentiment, in terms of whether the market is risk on or risk off, you will look to a currency such as the Japanese yen. The Japanese yen has a unique role in the forex market. It is bought when sentiment is poor, in other words, there is fear in the market, and this is sold and sold heavily when the market has an appetite for riskier assets, and riskier assets are equities are considered riskier assets. So, for example, equities will rise, the indices will rise, and the yen will fall. So that's what we mean by relational analysis. What added to that, of course, we have the political element as well, and Donald is a one-man capital market on its own. I have to say, we always sort of say, oh, Donald and his Twitter stream, but actually, if you and people sort of roll their eyes and raise their eyebrows and think, oh, that's all we need. Do we need another, a character like Donald, creating yet even more uncertainty in the trading world? But I read something very interesting the other day, and it actually pulled me up quite short, because I was actually then guilty of something that I tell traders that they mustn't be, is that you really mustn't have an opinion. You really just have to judge the reaction of what you see. It's very easy to take an extreme view on someone like Donald Trump. I'm not talking on the political sense. So we know his tweets are going to have an effect on the market, but there is a side that you have to accept with Donald, is that because of the way his brain works, as this commentator pointed out, he only focuses on one thing at any given time. He picks up his latest, if you like, shiny toy, and at the moment it's obviously the trade discussions going on between China and the US. And what you can do with Donald is read what he says, and because he kind of always signals ahead what he is planning to do. So in a way, he is very, very transparent. And if you and the market does react a bit like Pavlov's dogs. The bell is rung, and away they go. So, as I said, so rather than rolling our eyes and thinking, oh, Donald causing us even more problems, Donald could provide some very great trades, because we kind of know how the market is going to react. Anyway, that's my 2 pennies worth about Donald. David, do you want to say anything about Donald? So right, but let's carry on before we before this discussion goes off in a completely at a complete tangent. Right, the indicators I mentioned, the quantum trading ones, tradable. You can use them across all markets, but the ones we've developed specifically for the forex market, we've bundled together into what we call the currency dashboard, and they're here: the currency strength, the matrix, the array, and heat map. And again, we will show you how you can use them to pick out trading opportunities. And I've got one to show you that I've been following since 6 o'clock this morning. It's actually on the Aussie dollar, but I'm actually going to show you in much more detail what I was looking for, what to look for, and how the indicators can help you with a selection of a trading opportunity. You don't have to use them in this way. You can also use them, obviously, if you like to trade maybe 1 or 2 or 3 pairs yourself. You've got a little portfolio of pairs. Again, they're fantastic because they give you an instant snapshot of what is happening to your currency pair of choice. And this is the currency dashboard. You don't have to buy them as the dashboard or even the complete package. You can buy one. As I said, we have a bundle. One bundle is the currency dashboard. And whatever you buy, when we upgrade the indicators, they are upgraded free of charge, basically. The advantage of buying the full package is that when we develop new indicators, they are added to your package for free, so you only actually pay us one. The last indicator we developed for forex was actually an index for the British pound. So if you had the full package, it would automatically appear in your navigator. And of course, if you buy one or a bundle and you want to upgrade, you will always be given a credit. The indicators come with 24/7 support, and we really do mean 24-hour support, 7 days a week, because we have people in the who cover the Asia session and the New York session for as well. And as I said, all upgrades are included, and everything is covered by a 7-day money back guarantee. So if they don't work for you, or they don't suit you, there's absolutely no questions asked. The platforms that we have available at the moment, MT45, NinjaTrader, TradingView, and we're working on TradeStation as well. And I have to say, it's a very, very cool platform, TradeStation. It's we used it some years ago and have now come back to it, and are really very impressed with the developments that have made, but we're still working on those at the moment. quantumtrading.com is where you can find all the information, the prices and videos on the different indicators. I mentioned the education program. The education program is self-directed. It comes with the complete a full package of indicators. You just have to select which platform you would like to use, and if you've ever bought anything from us, of course, a full credit would be given and put towards the program. And really, all I can say about the program is it really does give you all you need to know to trade Forex with confidence. I won't pretend that the program, you know, you can do the program in days or even weeks. It is really comprehensive. You do have to spend a little bit of time every day, but we think probably in 3 months. David, do you reckon 3 months? We reckon if you kind of know nothing, and this is really your first foray, and you're a real novice, as I said, a couple of hours a day. You know, having a demo account with at the same time, you know, having read some books as well, and you already know the basic trading terms, as it were. You know, you understand what a trend means, as it were. A couple of hours a day. I think by the end of, as I said, at least 3 months, you will absolutely know. We believe everything you need to know to trade Forex with confidence. And as I said, again, I can only tell you the feedback that we've had, and it has been overwhelmingly positive from our students. We are looking at other education courses, as it were, possibly looking at something to do with stocks, but that's very much when we have TradeStation on board, because TradeStation has a very unique indicator. Is it an indicator or application within its platform? It's called Radar Screen. No other platform, to our knowledge, has it. It's a very, very powerful application that allows for a very quick, easy sifting, if you like, of what to trade, really, and not just stocks, but other markets as well. So lots of cool stuff coming in the future. quantumtradingeducation.com is the site where you will find all the information you need. Right, that's enough for me. I'm just going to pass over to David, because I just need to do a little bit of a catch up on my Aussie dollar a trade that I've been looking at since this morning to see what's been going on since I've been speaking, and then we will just proceed straight into the charts. If you've got any questions, please put them into the chat box. We'll either answer them in the box or on air.
Thanks, darling, and a very warm welcome to you all. Great to have you with us today, and I hope the weather's a little bit better than it is with us in Hampshire. It's very cloudy, not very pleasant, but at least it's warm, and no sun this morning, sadly. So there we go. As Anna said, if you do have any questions, please just drop them in the chat box. Happy to answer them there. If they're short ones, longer ones, we will answer on air for you. Anna's just sorting out her screens. She's on MT5. If you're not familiar with MT5, it's just a sister application to MT4. It has very much the same look and feel, but it has more functionality, and it has a much broader market reach as well. So not only will you find Forex there, you'll be able to trade all the other markets, predominantly commodities, indices, and a certain number of stocks as well. And of course, cryptocurrencies. It's pretty much all there. And perhaps the major benefit of it is if you want to trade these markets, unlike having a pucker futures account, which is expensive, you need a specialist futures broker. You need to trade the futures contracts, which carry heavy margin requirements, etc. This is a relatively straightforward way to get into those markets. In addition to that, and perhaps picking up on the point Anna was making about relational analysis, it also gives you all that information in the same platform. So it's just a terrific way of not only being able to access other markets, but also looking across the markets from a related perspective in terms of what is going on in terms of sentiment. Yes, you can go to investing.com, but it's much nicer to have it on your own platform, and you can set up your own workspaces accordingly. So I would urge you, if you're on MT4, take a look at MT5. It's fantastic, much broader array of timeframes, as you can see down the left-hand screen there on the left-hand column, and it is, as I say, accessing all these markets as well. I'm on NinjaTrader. I've got a few things running here. I've got Anna's been on Aussie. I've got the dollar. I've got dollar Swiss up actually, which is moving quite nicely at the moment. So we'll move around, and I'm just going to pass back to Anna and we'll get going.
Okay, very, very quickly. Now, what I should have done, and I'm actually going to do it for next time, because it's all very well me saying, well, this is what I saw at 6 o'clock, and this, this is the reason for this decision, is I'm actually going to take screenshots of what I actually see at that time, and then pull them up and say, look, this is what was happening at the time. It's the only way I can, that it'd be much easier to, it puts everything into context, as it were. Okay. Where do we start? And what I always start with is the currency strength indicator, which is the, as I said, the first in the currency dashboard. I've just got the 12-minute version up here at the moment. You would have this in multiple timeframes. But what the currency strength indicator does is each one of these lines represents an individual currency, and what it does, it is picking up the buying and the selling in, as I said, the individual currencies. And you can use this indicator in a number of different ways. First of all, as I said, it tells us what the market is doing at in any particular time frame. So, for example, this morning, the currency that I was looking at was actually the buying of the US dollar, and in fact, I looked at it against the Aussie dollar, which was falling. But we can see here since 6 o'clock, we've had a little bit of a reversal where, in fact, the Aussie has now literally just turned up, and the dollar is still climbing, but it's kind of flattening out, as it were. So the indicator tells us these, what we call these overbought and oversold situations for the individual currency. And an overbought is when there has been strong buying of a currency, and we are looking for a reversal obviously here to the downside. Because the great thing about the forex market, it is a market of true mean reversal. So you get these sort of what we call sine waves. Things go up, they go down, they go back up, and they go down. It's not like a stock. It's not going to go to zero. So from that perspective, there's a lot of kind of mathematics behind this market. So having an indicator like this tells us immediately what's being bought and what is being sold. Now, what these lines, they tell you that. Next, they tell you you can pick out a pair just by looking at the currency strength indicator. You say, well, okay, just eyeballing it. You say, well, we've had a very strong rise in the Japanese yen, a very strong fall in the US dollar. But your logic would say, well, potentially they're both at a point and they're at an extreme. Go and have a look at the dollar yen. And if the dollar yen is one of your currencies that you like to trade on an intraday basis, you look at it, you think, oh, great, there's been some great buying in the yen. The chances are there's going to be an opportunity for a reversal trade. So immediately you don't have to go even looking at a chart. The other way to use this indicator, because this indicator works on different levels, is what the lines also tell us is when two lines are moving in parallel. So, for example, here, let's have a look at this point. We've got, this is the dollar, the Swiss franc going down, and we've got the euro, which is this gold line, and they're sort of moving together. What that is highlighting is that that particular pair, because the lines are moving in parallel, they will be in consolidation. There is no divergence between the currencies. Now, when they cross, as they do here, you've got the euro Swiss, that is telling us, well, there is now divergence has come in to that pair. The Swiss franc has continued to fall, but there's been an uptick in the euro. And again, information that by the time you look at all your 28 pairs, your eyeballs would be swiveling into the back of your head. Now, what we've also done to make things a little bit easier is we have created something called the currency, oh, sorry about that, take that off, currency matrix. And what that does, that takes the information from the CSI and actually pairs the currencies up for you. So you don't have to then go and check everything out on the charts. And what we have here is, and it ranks them as to the pairs where there has been the most buying, the strongest, and the weakest, as we can see here. What you can do is you can then highlight, you can pick out what the individual currencies are doing and how they are performing in what we call their complex. A currency complex is all the euro pairs put together, all the pound pairs put together, and what you can then see is you say, well, we can see that as we see here, we've got the British pound sort of turning over. Well, we know the selling of the British pound, but where is it being sold the most, as it were, or where is it being bought the most? Now, going back to this morning, what I noticed was that the Aussie dollar, the New Zealand dollar, and cable were all occupying the top 3 spots, which means that they had been heavily bought. So they were at an extreme, in the sense that, and I knew it was an extreme because the dollar was at an extreme down at the bottom. It was very, very oversold. So as I say, next time I will take a screenshot and you will see exactly what I mean. But what's also interesting about the matrix is these numbers, let's take all this out, is these numbers that appear at the top and at the bottom. And what these numbers tell you is, if you like, it gives you an indication of the strength of the move that has been in that particular pair. And the reason I was particularly taken with those 3 pairs was that the values at the top were very much out of kilter with the values at the bottom. You see here we've got +8 and we've got -5, and that kind of gives you that they're kind of moving, whether they're moving up or whether they're moving down, they're kind of moving at the same rate. But this morning the values that were given for the 3 pairs that I mentioned were in double figures, and in fact the strongest was the Aussie dollar, which is why I went for the Aussie dollar as opposed to cable and the New Zealand dollar. Whereas the values at the bottom here of the pairs that we're possibly looking for a reversal to the long side were very low. And I'm thinking, and now I say, yeah, that kind of tells me it's all a bit sort of desultory. And like David, things we'd like to, if you're not going to be in a trade for very long, you want kind of things to move, because you don't want to hang around too long, because the longer you hang around in a trade, especially on the faster time frames, the risk kind of increases, the risk of a sudden bit of volatility coming in and taking your trade away. You don't want that. So you want things that is moving. You want to get in there, take your pips and then get out. And in fact, what we've also developed, which is the third of our indicator, is this what we call the array. Now the array actually measures that momentum, and we can see here that in fact it's the Aussie dollar is one of the Aussie pairs. It's not huge, but it's at the top, and in fact David was also looking at the Aussie yen, and that is at the bottom. And finally we've got the heat map, and what you can do here, what the heat map does, it tells us, let's pick out the dollar one. You can actually see you can see your multiple time frames, and you can see, if you like, the ripple effect, that maybe you start off in one time frame and as it ripples through the time frame. So what do we have here? Well, as I said, this was solidly red up until to the 30-minute, which is what I wanted, because my time horizon is Renko 3-minute chart, 30-minute chart. That's all I'm looking for, trades in those in that combination of time frames, and that was red. But what I can see now is there has been a change of sentiment. It's gone green in 1, green in 5, 15 is still kind of hanging on in there, but the value is going down. The 30-minute has actually turned red, and that tells me, I go back to the CSI and I can see the, let's have a look. Let's have a look here. What's it telling me? Well, there was buying of the US dollar, and that's kind of come to a bit of a pause, and it's kind of rolling over. What's interesting is that the Aussie is now being bought relatively strongly. So if I wanted to switch out of that and say, okay, well, they're buying Aussie now. What are they buying the Aussie against? And so I would use the same process of elimination once again. And what did I see? I see, well, look, there it is. The Aussie Swiss is actually at the top of the pile. So that's, and I haven't even looked at a chart yet. So these indicators, they give you all this information before you even look at a chart. But to get back to what I looked at this morning, let's dock this, move it out of the way. As I said, my three charts are, I have a Renko. This is set at the ATR function. I have a 3-minute chart, which is here. And I have my, what I call my benchmark chart, which is my 30. I mean, I've obviously got the daily here just for some context. And we can see here, the trade that I took this morning was, very much against the sort of sentiment. We had this huge up buy yesterday and more buying of the Aussie dollar. That's Powell. That's Powell's comments to Congress yesterday, when he basically gave the market what it wanted, in the sense that yes, there are probability of tax cuts coming along the line if the data, but always keeping half an eye on the data. But essentially, the market has taken that as saying, yep, tax interest rates. There is going to be an interest rate cuts. Good for equities. And a sell of the US dollar. Gold went up, oil went also up because of geopolitical, the incident in the Straits of Hormuz, and it's a perfect example. And the Canadian dollar also went up. Perfect example of how all these markets are interrelated. Right, to return back to this little trade that I saw earlier on, basically the Aussie dollar was up to that point, was in consolidation. We had a change of trend dot here. It was this at this point 69.74. This was the we had a trend dot, a change of the trend monitor, and at the simultaneously the VPOC, the volume point of control, was actually here. It was one of my favorite sort of chart setups where a market or a currency pair is in a period of consolidation, and then we have a breakaway. And in fact, it was just this little piece of price action that we see here. And going back to volume price analysis, what do we have? It got to this point here. Then we have we have a lot of volume piling in under these two candles. But look at the spread of the candle, look at the amount of volume. They are clearly anomalous. If with that amount of volume, you would have expected that to go way, way higher. It didn't. So that what that told me was that this it wasn't ready to reverse then. We had a bit of selling coming in with a decent amount of volume, and then it carried on low. But the selling then petered out, as you can see here by these two volume candles. You've got falling prices, falling volume, and I thought, yeah, that's probably is now going to reverse higher, and that is what has happened here. And this is what we are seeing reflected in the Renko chart, and really picking up, if you like, the very much longer term sentiment that we can see on the daily chart. But it was a perfectly valid little scalp this morning. I think it was only 10, I think it only came out at about 10, 12 pips. And just to look at the 30-minute chart, what is the context of the 30-minute chart? Let me just take off the Camarilla for a second. There we are. Here we are. In fact, this was the little bit of price action that we saw here. It was in fact in the wick of that candle, but it looks like we've just had a little bit of pullback. And the question you say, well, why are you trading against sort of a stronger dominant trend in a slower time frame? And the answer is really we're always trading against a trend somewhere in another time frame. And the question you have to ask yourself, is there sufficient movement in as I said, the move to the downside? Was there sufficient number of pips? Was it was it worth taking the trade, perhaps taking on a little bit more risk? And to be honest, given what the chart was telling me, given what the Renko was telling me, I took the decision. Yeah, there was enough in there to be able to take a few pips. But your approach may be very different. So I'm just going to pass it over to you. Is there anything else you want?
Thanks, darling. And
Sorry, did you want to say
oops.
something on my chart?
Oh, sorry.
Yeah. Did you want to move back to my chart?
Don't worry, that's fine.
You sure?
Yeah, sorry. We're at 6s and 7s. Apologies. Anna thought I was going to talk at her charts, but she's actually transferred over to mine, so you should actually see my CSI come up there. Sorry, let me just change that over onto the multiple time frames again. There we go. I've got I switched over to the Aussie yen. I was looking at the dollar Swiss just to see what was going on there in terms of dollar Swiss, euro dollar, but I've got this back on the Aussie yen. And just to pick up on what Anna was saying about the time frames, I think one of the issues that we see repeatedly, and it causes all sorts of issues for not only students but experienced traders and whatever, is the whole business of isolating out what it is you're trying to do in your chosen time frame. Because when all's said and done, traders can make money both sides of the market in the same market conditions. One trader can be short, one trader can be long. They both make money on the same pair. It's just a question of what your time window of opportunity is. If you're a scalping trader and you're on a 30-second chart or a 1-minute chart, whatever it may be, and you're making money to the long side, a short trader will be making money but not really interested in the 1-minute time frame. We'll be looking at a 15-minute, maybe a 30-minute in a trend elsewhere. And that's really the hardest thing, I think, to focus on the whole time, and to be disciplined in deciding ahead of time what it is you are going to trade and for how long. Because whatever you look at on a chart, and you can go through, I mean, we can go and look at the CSI, for example. Oops, sorry, just pop that down out of the way a minute. We can go and look at the CSIs across various time frames. Where are we? Here we go. Right, what have we got going on at the moment? This is on 5-minute. At the moment, we've got very strong buying in the Canadian dollar. We've got some buying in the New Zealand dollar here, but the strongest is certainly the Canadian dollar, purple line rising very strongly. The buying that we saw early doors, this is 6 o'clock. This is pretty much when we were at our screens. So there was some decent buying in the US dollar, the red line. That is now coming to an end. It's rolling over, it's turning down. So we're starting to see selling coming in. Plenty of opportunity for buying in there. Now we're starting to see selling coming in onto the US dollar. Now, someone who's trading a slower time frame, we go up onto the 10-minute, for example. That was the buying. It's now kicking over. This is where we're seeing buying of the Aussie. We're seeing that strength in the Canadian dollar here. The New Zealand dollar here, it's been oscillating around. It's not quite into overbought yet, but it's certainly staying up there. It's not ready to fall yet, so we've got more buying there. Up onto 15. We've seen quite a decent amount of selling on euro into the European session here at 7 o'clock. We're just starting to see that kick up, so we're starting to see some buying coming in. The selling in the Swiss franc that we've seen across the other time frames, the green line over here, that's pretty much continuing. So this is on 5, that's on 10, this is on 15. So that selling of the Swiss franc is there's no end to that at the moment, so it's pretty strong. It's across a decent slice of time from 5 to 15. And you could match that up with, you've got a cross here on the Canadian, so you might look at the Canadian Swiss, for example. You might look at the euro here, euro CAD, and you know there are various opportunities. But my point is this, that if you're looking across the time horizons and you're trying to decide how long you're going to stay in, then that is the key to it. Because what often happens is you'll look at something down here, there's an opportunity to make money. That's fine for the scalping trader, but up on the longer term time frame, then for the longer term swing or trend trader, what they are witnessing is merely a pullback or a minor reversal, which you as a scalping trader are seeing as an opportunity to make money. And that's what it all comes down to. It's isolating out what you're trying to do on that particular position in the market, getting in. If you're deciding that you're on a 1-minute or a 30-second, 15-second, 2-minute, whatever it may be, you're in, make some money, get out again. That's your chosen operating tactic, if you will. But for the longer term trader, it's of relatively little interest because they know for a fact that all markets don't go up and down in a straight line. They go up, they pause, they pull back, they go up a little bit more, they pause, they pull back, etc., etc. And that's what a lot of traders find so hard, is really to decide ahead of time what it is they're going to do on that particular trade. Now, you can be a scalping trader, you can be a longer term trader, you can be any kind of trader you like. It doesn't dictate your tactic to the market. What it dictates is the tactic to the market on that particular position. You can have different accounts running different time frames, as indeed we do, to try and keep things clear so that you understand what it is you're doing on this particular position, which maybe you might be holding for days, weeks, or months, whereas on an intraday basis, you're short and long all over the place. You know, you can be trading both sides of the market, and that's what it comes down to the whole time. Sorry, wrong one. Let's go back to the charts again. Let's just see what's going on there. Right, here we go. We're starting to see a move away. This is the Aussie. Got a little bit more buying coming in on the Aussie. This is on Aussie yen. I've got the 1 minute, the 2 minute, 5 minute, so pretty quick across the top here, down onto the 10 minute, the 15 minute, and down onto the daily here. We were trading around the volume point of control here, so we're expecting congestion. We have the volume point of control here. We're moving well away from it here. We've got some nice volume coming in now as we're coming into the London session. So volume per se will pick up. So in terms of comparative nature, in terms of comparing volume, just pop this one up, make it nice and easy to see. This is where we are. So the period from here through to here, we can compare that like for like because that's all European. Now we're moving into the London session. We see volumes picking up. They pick up naturally. We're starting to see some decent bullish momentum coming in on the Aussie, decent buying, moving away from the volume point of control. Just looking around here, seeing what's going on. Up on 5, there we are. We've got this volume coming in. Little wick to the lower body. Decent volume under there, nice strong volume. What's that telling you? Well, it's telling you it's certainly not selling under that candle. There's much more buying than selling. In terms of how far this has got to travel, first thing we're looking at is the volume point of control. In terms of volume acting as potential resistance, so as this histogram falls away, the probability is that if the market's going to go through here, it's going to go through here pretty quickly. Why? Because you've got very light volume in this region, so there's very little in the way of volume to act as resistance. You can think of it exactly the same way as price. These levels up here are all based on price. This is the accumulation distribution indicator, but it works on price. The wider the line, the more sustained is that area of either support or resistance. Down here we had a cluster of two, very strong. Both lines were pretty wide, so first of all it tells you that this is a decent area. Secondly, you've got a cluster of them, so this is very strong indeed. So this is acting as a very good platform. So once you're through that region, you can be pretty much guaranteed you've got a nice strong platform of potential support in place. These are price-based, but exactly the same on MT4 and MT5. You have the dash lines which show relatively strong, and then you have the solid lines which show very strong. And where they cluster together, if you've got 2 or 3 solid lines clustering together on the chart, then that is a very, very strong region because you've got the cluster effect coming into play as well. So we've moved through a decent level here of price-based. What was resistance has now become a potential area of support. You can see over here how it was capping that advance there. The market was trying to rally. It was constantly capped, tested, capped. Down it came again, back down to volume point of control. Now we're trying to push higher. Decent volume here coming in under this candle. Decent volume under this one. Only a little wick to the top body. Now we're looking for the next candle to build, and on up we go. And as I say, as we move into this area of volume here, as the volume's falling away, we expect the price to move through there pretty rapidly. The volume histogram has run out of space there, so we move up onto the next time frame, go up onto our 10-minute time frame here. Just pop that up full size, make it easier. That gives us another perspective. What are we looking for now? Well, again, you're looking at, we've got a heavier volume here because we've got a really heavy area down here. So this is falling away on the 10-minute time frame. So similar sort of picture, good volume under that last candle, wick to the lower body, a little bit of a wick to the top side, but generally speaking, you know, that's not too bad, not too shabby. The trend line here, which is the second indicator on the trend monitor, is starting to climb through the midpoint fulcrum here, this black line, which is 0. So we're starting to see that momentum gently develop. We're starting to see the trend monitor transition. We've gone through this full spectrum here. Sorry, we've missed out the dark blue here. It's gone from bright red into dark red. We've skipped the dark blue. We're going into bright blue potentially as the bullish sentiment develops. Then as we move higher, again, the volume falls away. We get up to this nice low volume node here. And at that point also, we have a price-based resistance level, which is pretty strong. So from a resistance perspective, very little in terms of volume, but we have very strong in terms of price. So it'd be interesting to see what occurs as the price action develops to this level if it gets that far. See what else is going on there. Down onto 15. Let's have a look at the 15-minute. And this has gone through the spectrum. We've gone from bright red, we went into darker red, into darker blue. We haven't yet come out the other side into darker blue at this stage. We've actually gone back into a darker red. So, you know, this sentiment for this bullish trend is not developing very strongly at the moment. But if it does over time, then what we'll see is we'll see that trend line climb above the midpoint of the trend monitor. We'll see this transitional change take effect. And we're in early doors of the London session at the moment, and we've got some relatively light volume up the chart here, so this shouldn't present too much of a barrier. We've got some relatively minor support here. We've got resistance rather. We've got some stronger resistance coming into play at this level, but then again we've got a nice low volume node here. So it's putting all these things into effect. It's looking across the time horizons. You know, where are we going with this? And if we climb right the way up, then if we get up to this level, another 16 or 17 pips, then at this point we would expect to see congestion building for several reasons, not least because we've got the volume point of control, which is the heaviest volume concentration of all on this particular time frame. And obviously at that level, we've also got this very dense concentration of volume sitting in that region because it denotes where the VPOC sits. Got light price-based potential resistance there. So up and down the charts, the various factors coming into play. Obviously what we're looking for, the reason this volume is not building down here is because I have it closed off. It builds at the end of the candle, but you can have it building in real time. I just happened to shut it off just for data feed connection issues because I've got so much data coming into the stream all over the shop, loads of monitors around the place. So I just like to close that off to keep it to a minimum. So that's the reason the volume's not showing here, but you can have it building real time on tick or on each price change. Or at the end of the bar as I've got it here. Let's just go right back up to the 1 minute, see what's developing there. A little bit of a pause point. We've got decent volume under that last candle. So we've got a wick to the upper body. We've got a narrow spread wick to the upper body. We've got narrow spread to the body itself and some strong volume underneath. So what are we expecting? Expecting a little bit of weakness. It also reflects the previous candle, similar sort of thing, pushing up, comes back down, closes at the open. Not a great volume under that one, but certainly under this one we've got higher volume. So we're looking for a pause, we're looking for a potential reversal. You know, the market is a little bit weak at the moment. And in addition to that, if you add those two candles together and looked at those on a 2 minute time frame, you've got a 2-bar reversal, overlay one on the other, and that's a 2-bar reversal candle. This is London Open, so we're looking at the volume in this sort of area. We're comparing like with like. You can hop over and look at it in terms of Europe, but in terms of true comparison, you're really comparing here like for like from 8 o'clock onwards up to where we are at 8:15 at the moment. Trend monitor is nicely blue, helping to keep us in. That last candle, that looks nice. We've got a wick to the lower body. We've got good volume under that. So the selling that was evident here, that's been replaced, if you will, by some buying coming in under this one. Trying to push the market higher. Went through that low volume node there pretty quick. We've got some volume building here now above. Let's see if just push through that level, continue the bullish sentiment. We had a doji on 2 here. Here we go. We had a doji candle last time around, decent volume under that. Not indicative of reversals or anything other than the fact of indecision. So we look at that, think, yeah, fine, okay, we've got some indecision there, decent volume under it. You know, bulls and bears fighting it out, and we've got light volume ahead. So, you know, as everything's building. And the other aspect to using multiple time frames, which I will continue saying till the day I die, is It is so powerful because what it reveals is not only the different phases of price action, the different signals that you get from all the charts, but what it also reveals from the indicator perspective. You can see it here rippling through. We had this flip-flopping around here, you know, some changes in color. As we've come out the other side, now we're starting to see that bullish sentiment take hold. It's over here on 2, it's developing on 5, it's starting to develop on 10, it has yet to develop on 15. That is what you are looking for. That is the reason for using multiple time frames, because it reveals that flow of sentiment, that flow of price action from your fastest time frame to your slowest. Now you could have a 15-minute, a 30-minute, an hour, it could be an hour, a 4-hour daily, it doesn't matter. It's the concept of using multiple time frames, and the fact that what it tells you is coming up. What's coming up? What is the price action telling me? What have I got in the way? What have I got in my slower time frames in terms of potential resistance to this move? You know, have I got high volume nodes in the way? Have I got price-based resistance that's going to come into play? What is my volume telling me on the different time frames? What are my candles telling me on the different time frames? What are my indicators telling me? And, you know, we're just doing this on a multiple time frame. I'm not even looking at the CSI. I'm not even looking at the array, the heat map, anything else at the moment. I'm just looking at the charts themselves. It's very difficult to get across everything that you would look at on a chart in these webinars, because we are limited to one screen. But you need multiple screens. We all start with one. You know, I think we started, to be honest, to be fair, we started, I think, with 2. We had 2 huge, great monitors, which we struggled to move around. Those were in, you know, they weren't quite valve driven, but pretty much. They were monster. They were 21 or 24 inch. I think we had 2 each. And that's how we used to trade. That's how we started. Now, you know, you've got flat screens, multiple monitors, have them on stands. This is what you need. You need to understand what is going on, because not only are you looking at this, you're looking at related markets. Let's just flick over very quickly, see what's going on in terms of the indices. You know, what's the sentiment like? There we go. This is the 3 sisters, or the 3 primary indices for the US. We've got the YM, the NQ, and the ES here. And you know, sentiment is not strong at the moment. It was you know, very good, and now it's come off a little bit. We had a very strong day yesterday, driven by Powell, but now, you know, you're starting to see this flip-flop around. So that's going to be reflected in what's going on in terms of the yen pairs, in terms of equity markets and sentiment, and so on and so forth. Just go back to forex again. Let's go back to the CSIs. There we go. Let's have a look, see what's going on here. This is on. Let's go back to 5. Okay, on 5. Haven't looked at the CAD at all, but, you know, very strong move on there. That's now getting up into overbought territory. We've got some pretty solid buying of the British pound, this yellow line. You can see here the yen, that's selling off. That's selling off quite strongly at the moment, up onto 5, just up onto 10. Let's just let that load for a minute. 15 and 10. There we go. That's the selling of the yen. So if you were looking at something like the CAD yen, for example, that'd be moving pretty nicely at the moment. You've got strong CAD buying, strong yen selling. Let's see what's doing on 15. You've got a nice cross there coming in. So very heavy selling on the yen, nice solid buying of the Canadian dollar. You've got Swiss franc here falling, and you've got the dollar, which is trying to rally. What's it doing over here? It's trying to move higher. There is that sentiment towards it, but it's certainly not one of the easiest to trade right now, certainly on the faster time frames. At any rate, be better off advised looking at, as I say, the CAD yen. Having said that, it does make the point I was making earlier on. If you look at this on 15, if you're a 15-minute trader, maybe looking out to a 30-minute time frame, and you're looking at the CAD yen, fine. You've had the crossover, strong. It's rising strongly. The yen is falling strongly. If you go down onto the 5-minute, you as a scalping trader, and even faster time frames, maybe the 1 to 3 and 5, you'd be looking at this as maybe a reversal opportunity, because the CAD is now very strongly overbought. The yen is moving into very strongly oversold. What you may well see in the short term is a reversal opportunity, which a scalping trader will take to the short side, whereas the trader up here on 15-minute and 30-minute just accepts the fact that that is part and parcel of trading. And what you as a scalping trader is seeing as an opportunity for reversal, what he or she is seeing is just merely a pullback on a much slower time horizon. And really, in a nutshell, that's what this business is about. It's picking all this out and deciding what it is you're trying to do in your chosen time frame. Let's just go to, let's have a quick look at the array. This is on 5. CAD yen is up here. This is the one that's moving, but fun enough, you know, the New Zealand yen's moving just as strongly. If you isolate out the yens, there we are, New Zealand yen, CAD yen. So you've got some decent selling of the yen here, and the yen pairs are always a great complex to split out on the array because the yen is always the counter currency. It's always on the right hand side of the pair. Then what you're always going to see is very, very quickly that sentiment reflected. So you want to see for the yens, you either want to see them sweeping up to the top or all sweeping down to the bottom, and that tells you instantly that sentiment for the yen is pretty much universal. The Swiss yen here is lagging a little bit, but not by a great deal, but these are pretty strong, these guys up here. So it's per mini 1 from 4 up at the top there. If you go up onto the 10-minute, it's a slightly different picture. It will always be that way because it's exactly the same way as looking at this. Just flick that off there. It's exactly the same way as looking at this in terms of chart time frames. What you'll see on the fastest time frame is the development of a potential change, and as you move through onto the slower time frames, that is then reflected across those time horizons. Just isolate it out up here, see what's going. Okay, and what we're seeing here is if this develops into further yen selling, then ultimately all these guys will move up across this line. So it's when you sit and watch the currency array, it's like a very slow windscreen wiper or a radar screen. I'm sure you've seen them. It sweeps around, and this is what happens, particularly with the yen. You'll see them all starting to creep up. They sweep up. The faster they're moving, then the faster they will sweep up to the top side. If that sentiment is going to be reflected, you want to see the dollar yen moving off the bottom, and you want to see that yen selling, and gradually as it filters through, all these guys will start moving up the ranking ladder here on the slower time frames. Down onto the currency heat map, and that just literally stacks up everything, gives you a single window of all the time frames. That we have an extra one on NinjaTrader. We have 10-minute, which is not available on MT4, MT5. It is on MT5, not on MT4. And this gives you a snapshot, as Anna said, of sentiment as the sentiment ripples through, as it goes out from the faster time frames out to the slower time frames, and then you've got the ranking ladder on the left-hand side, which takes that view of sentiment and weights it accordingly. So if you're trading off the ranking ladder, then the time horizon, your time horizon will be much slower. These will move up and down here intraday, but they're not going to shoot from one end to the other as they would do on the matrix. So what you're looking at here is a much more measured view of sentiment, of bearish and bullish sentiment, because all these pairs then have a weighting, because sentiment in a 1-minute time frame is not going to be as important as sentiment changes in a 30-minute or an hour, and so on and so forth. So these are weighted according to time frame, which means that as they move up the ladder, then that sentiment is shifting, and gradually, as for just to take an example on the pound yen, if this green continues to move out towards the hourly and ultimately to the 4-hourly, then you will start to move these up. So looking at the ranking ladder, it gives you a view, if you will, of strongly overbought or strongly oversold, weighted according to the time frames, as you can see listed at the top there. And then the sells give you that visual perspective on what is going on in terms of either bullish or bearish sentiment as it ripples through from the fastest out to the slowest. Let's just go back to there we go. So we're in a pause point at the moment. Let's see where we are. Just waiting, developing. Pop that up on 5. There we are. I've got decent volume under that last one. And if this is going to continue, then we need to see a breakthrough here, and on up we go to the next level. Certainly the trend monitor is signaling out a little bit of weakness on that last candle down on 10-minute here. We had an effort to rise. Volume wasn't huge under there, so maybe a little bit of a pause point, a little bit of weakness, but it's still trying to rally. And down onto the daily, just for context, just move that out of the way. If I can grab the chart, which I can't seem to get hold of. No. Okay. you can see here, again, it's all about, this business is, I'll just pull that, there we are. This business is all about levels and flow, and the levels here, you know, it's a classic example. We've got a very strong ceiling of resistance here, very strong platform of support here, which was tested, it's been tested several times, in fact, and we're trading around the volume point of control. So from a longer term daily trader's perspective, what they would be looking for is this channel breakaway to the downside or the upside. Much of that will depend on what goes on in terms of sentiment for indices, but any move to the upside through this level, then you're looking at a really strong rally which could develop very nicely because you've got low volume here and nothing really in the way to prevent a decent move to the upside. If it breaks the downside, you've got a low volume node and possibly, you know, through this region back down into this congestion area. So that is a classic breakaway opportunity. It requires patience. This could be a 1 minute chart, happens to be the daily, but it requires patience to develop. You have to wait for it to come. But when it comes, it will be strong purely because it has time. It has the time element, and it's all about Wyckoff and cause and effect. The longer the time, then the longer the effect is like to last thereafter. I'm going to pass back to Anna because I've rattled on far too long.
Just to go back to the Aussie dollar, what of course we also have to take account of is when the time you place your trade, and to be very, very aware of what happens at crossovers. And by crossovers, I mean when another financial center is due to come in. It's just something that you have. New traders are coming on board. A move that looks, you know, to be going very nicely, maybe ahead of the London Open, and it could be as early as sort of 15-20 minutes before the London Open. It's, you know, it could, and the London Opens, the whole thing can reverse. As I said, new traders come in, orders are triggered that have been perhaps placed overnight, and as I said, a lovely technical setup that you see on the chart suddenly comes to a bit of a shuddering stop, and practically that's what happened on the Aussie dollar. You see the dramatic increase in the volumes, the activity. It hasn't really pushed this pair further up. In fact, it's gone back onto the volume point of control. The volume point of control is that area on the chart where there is an element of price agreement. There is no divergence. You can say the chart is in some kind of balance. It's balanced between the buyers and the sellers. There is no, there is no will to take it one way firmly in one direction or another. And unless you're trading some kind of option strategy where you're looking for a congestion phase, and there are plenty of option strategies out there, what we're looking for is divergence, because we're looking for a trend. It may not be a huge trend, but you know, it will be enough to be able to take a little slice of the price action out of that trend. Now, what's happened here is gone back into really sideways. So the volume point of control tells us, and and if you're looking for a trend, this is the 3 minute chart. It's telling you this is possibly not the one to consider. And looking over, I've got the 4 minute CSI here. When I said about lines moving in the same direction, you've got the dollar has suddenly found a bit of a bid. The euro is also going up. That tells me the euro dollar isn't going anywhere in this time frame. But look at the Aussie; it's also kind of turning over. So you know, this is what these indicators are telling you even before you look at the chart. Now, we've had a little bit of an increase in volume. You can see the number of times it's tried to break. It's tried to break away to the upside. Then it came back and tested it. We had this fall to the low side, to the downside. But again, buying came in. Why? Because we have a tail to the bottom of the candle. What's interesting is to look at candles that are very, very narrow spread with a lot of volume underneath it. There's a lot of compression of price action with a lot of volume. That also tells you the chances are it ain't going anywhere. But at some point, it is going to break away. No market stays in congestion forever. And this is where your slower time frames come up. as David has lots of time frames across his NinjaTrader platform. It's the way NinjaTrader works. It's just easier to have a lot of charts open. But maybe I'll try it on MT5 as well. The slower time frames will give you some indication of where this price is likely to be heading. So I've got the 30-minute chart here. Shift that out of the way. And this is where your support and resistance comes in. If I just decrease that a little bit, here we are, we can see, let's move that over. And the resistance line, and we can see it's been tested already, it's actually 69.77. We've had one test here, it's approached it again, it came off on this little candle up here. This is the little move, we had a little move to the downside. Now that move to the downside may have been sufficient for a trader who's just looking for a few pips on a scalp, as I said, but on a much faster time frame. But where this is likely to be heading, well, the support and resistance tells us 69.77. It's got to overcome that if this is going to carry on higher. But obviously, the CSI will tell us whether that is likely to happen or not. And what's interesting is there's also, we've had this volatility candle here, huge volatility candle, massive volume underneath it, retraced to within the spread of the candle, then managed to go up. But you can see this is where the VPOC is. It's kind of been coming back, testing it, going up, coming back, testing it, and going up. Now, if it stays in this region here, the volumes in this region will build. That will then move the line, the VPOC will move up to this area here, and we will get another congestion phase. But we'll have to see what happens in the rest of the trading session. But that's where, this is how we establish what the potential is of any trade. And in fact, on this time frame, looking at it from a break from the 30-minute chart, away from the VPOC, the monitor is bright blue, the trend dots are blue. We've only had to change into neutral, which is this grey colour, but for this, as I said, to move higher, it's got to break through this level here. It really just depends. As I said, it really does come down to how long do you want to stay in a trade? How long are you comfortable staying in a trade? Because if you want to trade the slower time frames, everything we say here, the analysis that we do on the chart, the way we use the indicators, they work in exactly the same way, whether you're on the seconds chart, minute charts, or you're on the hours, the dailies, etc., etc. But what it comes down to is, are you comfortable being on the slower time frame chart? Because the oscillations, the pullbacks, the corrections that you see on a faster chart, they will be smoothed away, but it may pull against you maybe tens of pips, maybe hundreds of pips. So therefore you have to think, well, what about my stop loss? Where's my stop loss going to be? And people say, well, I don't have a lot of money in my trading account. How can I possibly trade the slower time frames? You trade the slower time frames by going down to micro lots. Each pip is worth 10 cents, and you think, well, I'm not going to get very rich on 10 cents, on 10 cents a pip. That's not the point. The point is to become proficient and to become confident. What you're aiming for is pips. The pip value, once you become confident and your chart reading becomes, you become confident in your chart reading, hopefully you will use volume price analysis on our indicators, you then increase the value of your stake. But you cannot go into this, you cannot come into this business and have huge positions out on the market with a small amount of capital, because it won't take, it will only take a few pips either way to actually blow up your account. Whereas with micro lots, you can stay in there, it can go against you, you can be $20 down, $30 down. So what? That's 200, 300 pips. Does it really matter? Yeah, well, it matters if $20, if it makes you worried that you can't afford to lose $10, $20, then maybe this is not the business for you. But this industry, the forex, allows you to really participate in these markets with very small amounts of money, not using a lot of leverage. Concentrate and focus on becoming consistent, and gaining confidence with what you're doing. And you can do that if you're trading micro lots. And I have to say, there are some really very, very experienced traders out there teach this stuff, but also I know trade for themselves. They just trade micro lots. The thing is, you say, well, one micro lot, well, you could have 50 micro lots up, because you will be at a point where you become confident, because it builds your confidence. So you build up the pip, you can either build up the pip value, or you build up the number of contracts that you trade. And by building up the number of contracts you can trade, you can then take off profit. So for example, if you've got 5 micro lots out there, and it's going nicely against you, for you, you can say, okay, well, I'll take my profit on 3 and I'll let 2 run. Is that pretty much, would you agree with that, David? David is nodding his head vigorously. No, I won't, but I won't pass him over, because he'll get on his soapbox and won't be able to get him off. And we've got to go, because the dogs need their breakfast and they need a walk, but we will be back later at 12:45 our time. We'll be doing Forex again, so if you want to come along then, it'd be lovely to have you join us. If you've got any questions on anything we've mentioned, said, you can either drop me an email, anna@annacooling.com, or david@quantumtrading.com. So thank you so much for coming along today. It's been great having you. I hope you've enjoyed it, and we will catch you later.